All right, guys, so let's do something a little bit different here today. So I'm going to go through this article from the Motley Fool that says, where will SoFi stock be in 3 years? So we will look at exactly what they think, whether I agree, whether I disagree, and more importantly, give you the truth about the Motley Fool, Seeking Alpha, and all the other companies like that that create products like this. I know I get asked about it a lot, so you're absolutely going to get the truth behind those businesses as well. Just make sure you like the video if you like getting the truth without the hype, and if you like the style video, let me know. I can do more of these. And if you want to retire early and be financially free, make sure you check out the pinned comment down there where that's all we talk about is being financially free and retiring early. All right, so you guys know I'm a SoFi bull. I've been involved with SoFi since for a while now. Obviously, we were buying it like crazy in the 4s and the 5s, had a great run after earnings, turned profitability. Of course, now it's come back down again because Wall Street's being Wall Street. So let's see exactly what the Motley Fool says about the stock and where it's going to be in 3 years. So we start right off the bat with growth is key for SoFi. If history is any indication, there's a likelihood that SoFi will be a much larger corporation in 2027. Rapid growth has been the main aspect of the company's story up until this point. Headwinds like higher interest rates and general economic uncertainty have resulted in challenges for many businesses, but SoFi continues humming right along. Revenue and customers increased by 35% and 44% respectively in 2023 compared to the previous year, and these figures are light years ahead of what they were in 2020. Yeah, obviously all those things are true. I think we all know that. We're probably on the 10th earnings call now where it was just incredible performance, incredible guidance. So, I mean, there's not a whole lot here right now. I mean, they're just kind of stating the obvious in regards to SoFi and how they performed up until this point. But at least it's not the usual garbage that we see out there on the internet and such, at least not yet. So let's move into the next part here. Between 2023 and 2026, management expects revenue to rise by 20% to 25% per year. That's certainly an encouraging outlook that investors can be optimistic about. Well, right off the bat there again, we're kind of stating the obvious, and I'm not real sure why an article put out a few days ago is referencing growth rates in 2023. I'm assuming they meant 2024. I really hope they meant 2024. But nonetheless, you guys know that anything for me beyond a year or two is absolutely useless to look out. So this is obviously 3 years out at this date, 2024, 2025, and 2026. So 2026 is super murky there. Definitely can make a much better look out there at 2024 and 2025. And the guidance was very good. Now, let me be very, very clear here. The guidance was good, not incredible, not something that justifies some crazy multiple because they're just going to crush earnings, and not like they haven't been crushing earnings. They have been crushing earnings, but they're going to crush earnings with growth rates to bring that growth multiple way down. They don't have that sort of growth in them. That's really, really tough for a fintech stock in order to have that kind of growth. I mean, you need that 50% growth, 40% growth every year in order to just get some crazy multiple and have it come down just a year or two later. So we're not going to see that type multiple there, but nonetheless, absolutely correct. Great growth there from SoFi and great guidance there given by SoFi in regards to those growth rates. But again, nothing really new here that we didn't already know. So moving on here. However, SoFi has turned the financial quarter. The business reported its first ever profit under generally accepted accounting principles GAAP in the first quarter of last year, bringing in $48 million. This was after losing $320 million in 2022, $484 million in 2021, and net income for the full 2023 was negative $300 million. So they kind of got jumbled the order there, but whatever. It appears as if SoFi has reached a certain scale that it is on the path to sustainable financial performance. Operating a fully digital business model without the need for physical bank branches should have some benefits as it eliminates a huge overhead expense. Ally Financial, another online-only bank, has averaged a 21% net profit margin in the last 5 years. Should SoFi get anywhere near this figure, it would be a financial boom. In fact, the leadership team predicts that earnings per share will come in between 55 cents and 80 cents in 2026, compared to a 36-cent loss last year. Again, there is nothing really here except for reiterating everything from the earnings call and from the data sheets there that they gave us in the earnings reports. So I'm sure you guys are noticing a theme here with this as it kind of moves forward here. But I will say, I'll give them a little bit of credit here talking about Ally Financial, although they don't have near the product suites that SoFi has or anything else like that. So to me, they're not really an apples to apples comparison there, but at least they made an effort to do something outside of just regurgitating what's on the earnings there. But despite all that, let's see if they can redeem themselves there, because let's talk about valuation and where the stock's going to be in 3 years, because that's the next section we're going to talk about. Considering SoFi's past while also looking at where things stand today, investors should be encouraged by the trajectory of this business. It's not difficult to believe that the company will be able to grow its revenue and net income at strong rates. But for shareholders to have a winning outcome, the valuation also plays a key role. Right now, the stock trades at a price to sales multiple of 3.8. That's below the historical average for SoFi of 4.3. Assuming the valuation ratio is the same 3 years from now as it is today, I think investors will see solid returns. In this scenario, it will depend on SoFi's ability to grow its top and bottom lines. So great job right there of telling me where SoFi is going to be in 3 years. It's solid returns. That's what you're going to get there. And I'm sorry here, you guys out there at the Motley Fool, but using price to sales ratio for something that's 3 years out, it's not really the best measure there. I understand using price to sales ratios whenever we're looking at, pre-profit, but now that we're post-profit, we can absolutely assign a multiple to it. And obviously 3 years from now, as that multiple kind of finalizes, and we talked about it before, is it going to be bank multiple, going to be fintech multiple? I think it's personally going to be a mixture of the two there, kind of a hybrid type multiple. We can absolutely, kind of look at that and project that out there. But you guys are leaning on price to sales and using just SoFi's historical average when they weren't profitable, which of course is going to be very, very different than when it is profitable. And obviously, because they are profitable now, we might and we should start seeing the stock kind of get out of the traders' hands as they, it's not going to happen overnight. I know we all want it to happen overnight, but it takes a year or two, sometimes more, in order for that to happen. But it'll start moving out of the traders' hands and stop moving more into the institutional investors' hands and the larger investors' hands. And I guarantee none of those guys are looking at price to sales and especially comparing it to when it wasn't a profitable company at all. It's just that there's nothing really here for you to get after and nothing for you to do the valuation on at all. There's a reason why the article is exactly like this and why they leave you desiring more. And that happens in the very next line down. So let's take a look at that next line down and see what it says. Before you buy stock in SoFi Technologies, consider this. The Motley Fool Stock Advisor Analyst team just identified what they believe are the 10 best stocks for investors to buy right now, and SoFi Technologies wasn't one of them. The 10 stocks that made the cut could produce monster returns in the coming years. Consider when Nvidia made this list on April 15, 2005. If you invested $1,000 at the time of our recommendation, you'd have $444,883. All right, so you saw the game right there. It's all laid out for you. It was all to just pitch this thing right here in the end, right there at the bottom of the article, telling you, hey, here's all this, neat information about SoFi. We think it's going to provide solid returns, but we got a list here of better stocks that are going to have monster returns. So buy that. This right here is part of the business, and I'll give you the why behind the business here in just a second and how they have all these successful trades like they have right here with this Nvidia pick. And yes, I went and I found all kinds of, hey, this is the stock price in the next 3 years for you fill in the stock there. It didn't matter what stock I put in. I could find articles from Seeking Alpha, from Motley Fool, and a bunch of other companies like that, all doing the same exact thing, all with the same exact, just basically repeating the earnings call and then giving you a, hey, that's okay. Our product here has a better stock than this. So the question becomes, are these products worth it or not? I mean, clearly they called Nvidia, and if you just would have put $1,000 in, just a couple decades ago, you'd have $444,000 now, and that's a lot of money. So they obviously must be worth it, right? Well, I'd ask you to kind of consider this point right here. If I, let's just say I put out a video or multiple videos every day, and I cover multiple stocks every day. And one day I cover the bull case, and one day I cover the bear case, and one day I say buy it, and then one day I say sell it. And I do this for all the stocks across, hundreds and hundreds of stocks every single year. And I create multiple 10 best stocks to buy now, the 10 best stocks to buy, on a third Thursday on the, in March, or any of these other crazy lists that all these things produce. And they produce all these products, all these articles, both bull and bear cases all the way around for all the different stocks. Guess what? I'm probably going to be right because I'm essentially saying buy and sell all in the same time frame, so I can always point back to whichever side is the winner and then use that to pitch products moving forward. That's the game that all these companies are playing. That's the business model. You talk about hundreds of different stocks, give both the buy and the sell and the bull and the bear, and you always win. You are always right because you covered all bases. Now, I got it. Some of the articles have a little bit better analysis than other ones. Obviously, they brought on writers now and a lot of other folks where they just have a bull and a bear writer, and the bull guy tries to put up his best bull case, and the bear writer tries to pull up his best bear case. But the reality is they're both working for the same company that's going to say, hey, look, we got it right every time, even though, well, you guessed both sides. Of course you did. That's the business model. That's the intent behind these sort of things. So when you're looking at whether or not you want to do this or not, you have to evaluate the business model and understand exactly what's going on and then move on from there. Does the analysis that they provide enough for you to actually make a decision? And I don't even care if they say buy the stock. Not every stock is right for every investor every time, regardless. I can make a case for you pick a stock. You pick any stock out there in the stock market, and I can tell you why it's a great buy for one person and why it's an absolutely terrible buy for the other person, and it doesn't really have a whole lot to do with return. Remember, there are hundreds of winning stocks. There's going to be hundreds, maybe even 1,000 plus winning stocks this year. That many. There is so many. We can all win picking different stocks at different times that match our goals, that match our risk tolerance, that allow you to sleep at night while owning the stock, that have more volatility, less volatility, high risk, low risk. There's all kinds of ways to win at this game. So for me personally, I don't want something like this because even if they're telling me to buy it, it just may not be the right buy for me, my situation, my plan, my risk tolerance, all those factors like that. So for me, I don't see a lot of value in them, but hey, you guys got to make up your own minds there. But you guys know I'm bullish on Sofi. I've been buying Sofi. I'm going to continue to buy Sofi. And no, I don't need any article like this or any other article, any service to tell me that my due diligence told me exactly all I needed to know about Sofi, whether or not it was an opportunity or not. And it was very, very easy for me to spot the opportunity given everything else and all my factors that are involved with that. Now, let me be very clear. I'm not knocking the business model at all, and I'm not saying it's right or wrong or anything else like that. That's for you guys to determine. I'm just saying this is what goes on with this. This is what they're presenting to you, and I just want you guys to be aware of it so that way when you move forward to make a decision, at least you understand what's going on underneath and what the business actually is with this particular product. And just in the spirit of these articles, I mean, if you would have bought Apple way back when I did back in 2002, you'd be sitting on like 50,000% gains up until now. I mean, I don't know, guys. Whatever, that sort of stuff's just ridiculous here. But if you do really want to learn how to actually plan and do an analysis on a stock so you can determine if it's a buy or not follow me or not have me tell you whether or not a stock is a buy or not, or have my top 10 list of stocks that you need to buy right now that could be monster. I don't have any of that. I just have an educational system there to teach you how to actually do the analysis and to how to actually understand and create a plan and be able to purchase the right stocks at the right price for yourself, which that may just be a DCA, who knows? But the point being, all that education is available for you with my group. So check out the pinned comment down there. If you want to take those 5 courses for free, if you want to use our stock analyzer tool for free, if you want to be a part of the best 6, 7, and 8-figure Discord out there with lots of folks helping you analyze the company and understand what's going on. And we have so much more coming, guys. Yeah, we got live Q&As. We got all kinds of things coming. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.